The Hedgeless Horseman here. It's April the 22nd in Sweden. It's still the 21st of April in North America. Happy Easter. Hope you had a good weekend. I thought I would just do some quick comments actually on the markets. Because let's face it, I mean, it's gold is another record high on the gold futures. I mean, I wasn't sure even that the market would be open today. Yeah, I wasn't sure that gold futures or any futures would be open. I thought the Canadian market was closed, and then I got a message from a follow junior investor or speculator. He actually owns, I think he only owns one single junior right now. So you can guess how much focus he puts on that one. And basically got a message that, oh my God, gold is up $100, and these juniors are still not moving, junior explorers. So that's how I knew the market was open. I wasn't even paying attention. Then I looked at gold and it's like, oh wow, gold is above 3,400. It's like I've been expecting kind of a correction since gold went to 2,300 basically. I'm this time happens to be one of those periods where I'm very happy. I don't try to market time or guess when gold is going to correct or guess when gold is going to go up. I mean, it wasn't too long ago, maybe a year ago, when people were, and there was one guy who kept basically trolling, saying that gold is gonna go to 1800 or 1600, and that's when he's gonna pile in. It's not ready yet, yada yada. Like everybody's on Twitter. Basically, nobody actually makes any money, but a lot of people think they know for sure what the best thing to do is, and it's almost always has to do with market timing. Don't buy this yet. It's a you should be expecting a correction or whatever. And it's like, and I'm looking at the long game, big picture. It's like I think sooner or later gold is gonna make new all-time highs, and that's not a very ballsy statement because well, look where gold started. I mean, sooner or later gold always makes new all-time highs if it's the same monetary system. And here we are, 3,400. So I mean, there's been people that have missed out on this entire move because they were, trying to guess the next move, for example. And I'm not even trying to guess the next move at all. I'm just trying to buy what's the cheapest stuff I can find out there. It's like if I had to buy metals today, for example, I'd go with silver because the gold silver ratio is at like 100 or something. And typically, from if I remember correctly, that's not something you see at sentiment tops because I mean silver is kind of the bellwether, I guess, for actual speculation froth on precious metals. And if we're seeing a ratio 100 or maybe above 100 now, not sure. Well, yeah, I mean it's above 100, obviously. It's above 100, so that means there's basically no, I would say, Western speculation in this. This is, a true flight to safety kind of thing. And that obviously translate. I mean, we can see that in the junior space. Even with gold at these levels, there's, as we know, there's no froth in the junior gold space. Uh, at all. I mean, that's the crazy part. That's what's new in this cycle, in a sense, that it still has not really. We haven't gotten the masses in yet. I don't think we're even close to having the masses in. Not in the juniors. Uh, which is, I mean, I guess kind of unique because there's been no other reason. Or I've been invested in this space in 10 years. If there was ever a time the junior should, at least the good ones, should go up 100%, no questions asked, it would be today. Simply because where the gold price is and how much money the gold miners are making on their gold projects. That hasn't happened yet. So again, I think it's two sides of the same coin. Gold silver ratio above 100, barely any new money getting into the junior space. and that's obviously what's getting a lot of people frustrated. My point is kinda like I was debating with someone on Twitter today who basically hates the juniors. He's invested in some juniors, and he got into this space in 2020, I think, or 2021. So all he's really seen is like, somewhat of a, well, broadly based from those levels, a bear market, because the average junior is not higher than it was at the sentiment top in 2020. So, and I asked him, because he's like, gold is up $100 and nobody's buying up his juniors, not even his gold juniors. And I asked him, I mean, are you buying more? What's your sentiment, let's say, of should you be buying gold juniors or whatever? It's like, do you want to buy gold juniors if you see gold being up $100 extra? Let's say his gold juniors are down. He's like, hell no. I'm not buying, any more of these, yada yada. And I've talked about this before, which kind of prove. I mean, that's what's ironic. The way he's thinking about things, investing, speculating, whatever you would call it. I guess it's more speculating in his case. I mean, the irony is that he kind of proves why this sector is how it is. Because he can't, I mean, he's obviously aware of where the gold price is. He's obviously aware that gold juniors, a lot of them are not anywhere close to 52-week highs. I mean, he's probably aware that gold mining projects have never been more valuable than they have today. It's like, not theoretically, it's like a gold mine has never made more money than today. That you can look at the margins of the gold mines. That's not up for debate. Gold mines have never been more valuable than today. It may be in history, or at least like since everyone alive has been investing in the gold space. So it's like, from that sense, and you look what the ounces in the ground are trading for, even in the good projects, even in the projects that are not trading sardines. It's like that's never ever, I don't think, been cheaper. So it's like, if someone asks you, it's like, okay, what time period would you want to be dropped off in, and if you wanted to make money on gold units, for example, then it would be today, basically. I mean, literally, possibly today, because gold is up another $100. It's not even a period we're talking about. It's like gold literally went up $100 in the last 24 hours. That's a monstrous move. It's just that you're looking at like, 3%, but it's like 3% above $3,000 gold is $100. That used to take weeks or months for gold to move that much. I mean, juniors were absolutely lit on fire when gold went up $300 from 1,100 to, well, not even that. Let's say 1,050 to 1,350. That was good for gold juniors to make a 500% move. Even trading sardines and all that. So that's how much a $300 move triggered sentiment, or how much it changed from super depressed to very bullish. So much so that juniors became overvalued in 2016. Within the same year, basically, they went from undervalued to overvalued within 8 months. And that was a 500% move from gold, and the kickoff basically being gold going up $300. But we've seen gold recently go up $300, and we haven't seen anywhere near that type of euphoria, which also proves the point that it is not rational. And then coming back to this person I discussed this with today, who admitted it's like he's probably closer to selling his gold juniors than he is to buying more. And at the same time, he's lambasting the fact that, well, the reason why he hates the juniors is because they are not going up. They haven't gone up much, not the average junior, and they're not on fire today when gold went up another $100. But again, going back to the irony of him knowing this, seeing this, already being familiar with the sector, he doesn't want to buy it. He should, who one would think would understand the undervaluation much better than any other outside investor who has basically never invested in junior stocks, let's say the masses. So if he can't get himself to buy what is obviously the cheapest sector this has ever been in the last 40 years, but still he's very surprised and angry about nobody else buying it up. Isn't that kind of ironic? Like you don't have the quote courage, let's say, to buy something that's record cheap, and you're lambasting the fact that nobody else who doesn't even know much about the sector is not interested in doing that. He's unhappy with the sector because it's not going up. And he knows the sector, right? So why would an outsider who's looking at the sector knows even less about it? One might think that, okay, I mean, if somebody hears record gold prices, one would think that people would be looking into these juniors. But if they're looking at the average, junior trading sardine chart, they're not up that much. So there's not enough not enough momentum for the people who don't really know what they're invested in, who are already invested in this space, to get bullish, let alone then for an outsider who doesn't even have any clue maybe what these juniors do or what their products might be worth, to get interested. So I mean, it totally rhymes. So basically we're seeing the reason why the sector is not that rational, because a lot of people who are actually in the sector already, or maybe even closer to selling than buying. I am, as you know, all in. I mean, almost literally all in, and have been for, I don't know, since 2015. If I get any money, I'm putting that into juniors. That's, I mean, again, I'm always perma bullish if I find something cheap. It just happens to be that this sector has never been cheaper, but that my bullishness level doesn't necessarily transform into dry powder, unfortunately. Otherwise, I've never seen a better setup than today, and that's of course thanks to nobody actually giving a shit how cheap they are. And yeah, I mean, one thing is like either Mr. Market is the fish or we are the fish. If we don't know why Mr. Market is the fish, we are probably the fish. So obviously it's not a good sign if you're super duper frustrated about this sector right now and close to selling, you're obviously not actually excited about owning what you own. That kind of goes without saying. If you realized, if you had convictions, like what something is probably worth, and sooner or later that is gonna get reflected in the market, because that's also the thing. It's like obviously you make money from somebody willing to bid something higher, and then you can sell it to them later when they're offering to buy it for whatever. So it's like, it goes without saying that in order to make a lot of money in the portfolio, you want to be buying when nobody else is buying, and you want to be selling maybe when everybody is buying, right? That goes without saying. I mean, if you're buying when everybody else is buying, that means you're probably paying up, yada yada yada. That's what you cyclicality is about, front running the good times in bad times when nobody gives a shit, nobody bids it up. But as per usual, almost nobody actually is able to do that, because they're also waiting for the stocks to actually go higher before they get bullish on them. And again, if you have no idea what you own, if you don't know why a junior is like absurdly cheap, you're not going to be excited about being able to buy that company for an extended period of time, because you don't even know why you should be making money on it. You don't even know why the market is wrong. you're just waiting for the market to go up, so you feel good about yourself, and kind of people take that as a signal. Okay, well, then it was cheap, when it goes up, but it wasn't cheap before it went up. Hindsight investing is like, if something has gone up 100, 200%, then I can look back and say, wow, that was cheap back then, but I didn't buy it because I was waiting for the market to go up, and tell me that in hindsight I should have been buying at lower valuations. I mean, that's pretty much always what happens. It's like somebody tweeted to me not long ago, a few days ago, let's say recommending that anybody buys, I think it was gold units right now, is like the worst advice you could ever give, or it would be the worst mistake, something like that. I think I responded something, and he's like, I bought juniors in, I think he said 2021 or 2022, and inflation went up and decreased margins. And I've talked about this before. We hit. Let's look at it. Yes, so everybody is on board. Again, the sentiment was much hotter in the gold's junior space here than it is here, which again makes absolutely no sense. But we're not here for the market to always make sense. Obviously, the big money is buying something when it does not make sense in terms of it's being way too cheap. Way too cheap. The market is out of whack and it's too cheap. I mean, back here it was the junior sector was out of whack on the upside. It was irrationally too high valued, and even the majors starting doing very large acquisitions. But so here sentiment was very high. Then gold went down, went up to the same level, went down, up to the same level, went down, up to the same level. Meanwhile, inflation was going up throughout this time. So every time gold hit 2,000 again, the gold miners' margins were lower than they were when gold was at 2,000 the last time. So actually the value of the business, even though gold went sideways, the value of the business went down thanks to inflation going up. Okay, that makes sense in that case, why the sector was not as hot here as it was back here, because producing an ounce in the ground didn't make as much money as it did here. Now we're way past these levels. Inflation is not anywhere near having kept up with the gold price, and we're at absolute record margins. I think the average all-in sustaining cost for the large miners might be 1,500 or something. So I mean we're closing in on let's say 1,900 in ASIC margin. That's as much as the gold price was in total back here, and there was no gold producer producing gold at zero cost, unless byproducts I guess paid for it. So the actual gold portion was. But I think the margins, average margins down here was like 500 for major miners, because I think inflation had gone up and the cost creep of the gold sector haven't gone up, and you can kind of understand why, because things were kind of getting better and better and better. So, and gold price kept ramping. I mean, it had been going up for 11 years. So you can imagine that people thought it was going to continue to go higher, and then you see all these Redback Mining getting acquired for 7.2 billion, and maybe Barrick Gold did a bunch of stuff because they almost went bankrupt when it went down 50%. But you can understand why mining companies were gold mining companies were kind of splurging away with costs. Maybe every employee got a new company vehicle or something like that. Total opposite basically today. So we're announcing the ground is worth a lot more here than here. A lot more here than here. And despite this, junior sentiment was higher. It was actually higher here than it is up here. So how do you explain that from a rational perspective? I mean, it doesn't make any sense, given that we know for sure it's fact-based that gold miners are making a lot more here than here. Yet juniors were, I think, on a per ounce basis, probably maybe were even valued higher. Not 100% sure, and of course, I mean, given the levels they started at, this was a big move. Even though, I mean, it's not like they were maybe pricing in, $300 per ounce or something. Whereas like now, it kind of, some products probably made sense if they were pricing in $300 per ounce, because the ASIC margin is around 1900, and some projects that are not even built yet have projected all-in sustaining costs of like $1,000, so that's $2,400 per ounce in margin. And you can, I mean, again, it's like gold miners are making more money now per ounce than the actual total gross value on ounce sold here, which was 2,000. Well, or around those levels. So it's just absurd how much the gold mines have revalued. I mean, how much they're worth now. It's absolutely absurd. And it might be, I mean, one thing people say is like nobody trusts the gold move. And I can see that. I mean, it is kind of, I mean, it looks mad, basically. I mean, it looks like irrational exuberance, I was going to say. But I posted this chart before, which I find kind of interesting. It's like, I don't look at much in terms of trading, but I mean, I would say probably that one could make a RSI resistance line here on the monthly, and we just broke out of that. That tends to signal, when somebody asks me, I mean, usually I would take that as like, this might be accelerating. It's like a new phase of the movie starting, let's say, that we're getting into more frothy period with even more momentum to the upside. And gold is, I mean, I don't remember exactly when it started to break out. That was probably, it might have been this month. But it's like, since it looked like that was gonna head higher, gold is up like $250, which is a crazy large move. So I have no idea. It's like when you go back and look at, okay, RSI down here, I mean, that's when we were here. So yes, this time, that was the top before, the global financial crisis, and gold went down $50. That's not impossible that's what people are looking at, kind of. They're expecting that, okay, gold is going up because the world is going crazy or things are going to shit, and they expect a 50% decline. So a 50% decline from here would be like $1,700 an ounce. Funny thing is, like, quite a few projects on paper at least, and some actually would probably in reality, and there's a few mines out there that would be making money at that level. Not a huge amount, and the average margin is like 1,500. Or ASIC of 1,500 for the large mines. So it's not like they would it's not like they would be have insane cash flows at that point. Okay, I thought gold went down more. It only went down 33%. So what's that from here? 33%, like, yeah. So that's back to 2,200, which would still have pretty solid margins for a large amount of money. I mean, it's not, there's probably no good project around that if you built it today, they were going to have all-in sustaining cost of 2,200. I mean, most maybe sub 1,500 or some around 1,000. That would be like 1,000 to 500 to 1,000 in ASIC margin. That would still be higher than the 2011 high, probably on average. So it's just crazy. I mean, even if gold did what it did during the global financial crisis, gold miners would still be making a lot of money, because I doubt inflation went up during the global financial crisis. If anything, maybe down, regents, labor, yada yada. So that's the kind of margin we have. And the other time, what's this? Okay, so let's say around here, whatever, it was going, quite parabolic, and it reached this kind of level. Maybe that was here. Back then, it went up 116% more in 4 months. So it's like gold going to 6,000 in 4 months. If this RSI means we're going to have this much momentum. Imagine 4 months, $6,000 gold. By that time, I mean, you can forgive the market for a lot of things, like, what's going to take this to go high. If gold went to $6,000 in 4 months from here, I dare say that I think that would be more than enough to absolutely light the gold sector and juniors on fire. I mean, the gold majors would be up, hundreds of percent maybe. I mean, you would have, that would be absolutely crazy. But even if we're in for like a global financial crisis kind of thing, gold only sold off 33%. And there's also the possibility that it's not going to play out exactly like it did this time, or maybe not like this time either. Because like the West doesn't really seem to be in gold yet. That's the weird thing. If this is Chinese buying, that's what I've heard, Chinese panic buying, that's bad stuff is going to happen in China. Does that mean that this could, go down? Yeah, I mean, if the Chinese sell and all that, I think typically the Chinese are kind of sticky investors in a sense. And you have no idea when the correction might come when gold is at $5,000 or something. It might come tomorrow. It's like nobody has absolutely any idea, even though everybody believes to have an idea. But I wouldn't think so, that they don't know. My point is, the margin is absolutely insane. But I would also point out, and this I think is extremely important, there's a lot of people who are, again, whining that their, exploration or discovery stock is not moving with the gold price. But in a sense, that makes kind of sense. Why do early stage explorers or even, early stage pre-discovery or early stage explorers, post-discovery, yada yada, why don't they necessarily go up a shit ton, today, for example? They tend to have done historically. I mean, juniors overall tend to move with the, gold price, yada yada. In a sense, it kind of makes sense, because let's say you have a early stage explorer or a pre-discovery story. They don't have a gold deposit to monetize, so it doesn't matter what the gold price is if you don't have a deposit, right? If they end up finding a deposit, it might mean that it's going to be in production in 12 to 15 years. Does it have any impact what gold traded today for a deposit? I mean, if we're talking intrinsic value, does it matter that gold traded at 3,400 today if the ounces in the ground in that deposits are gonna get monetized and have their intrinsic value derived, in a sense, I guess, 12 to 15 years from now? Not really, right? I mean, you can't get paid for, if I get a gold mine up and running in 15 years, I don't get any money for what the gold price was 15 years earlier. That's absolutely irrelevant, right? I mean, it's like you start to build a mine here, whatever, and it's priced like, I don't know, reflecting the potential margins here, or let's say you start to build it here. This is when it actually gets into production. Do you get any money for gold price having been up here? Obviously not. It's a new gold price. You get whatever price on a daily production volume, what the gold price is on that given day. So it's like there is no, I mean, I hope you're following here. There is not really much connection between what the gold price is today and what the value of a gold deposit might be in production 15 years from now, what the value of that is. Today is almost irrelevant. I mean, if gold was $1,000 or gold was $3,400, both would have equal amount of impact on the actual value of that deposit getting in production in 15 years, because gold price could be much higher, or theoretically even lower. Even that seems like a long. That seems surely like a stretch, but you don't know. So it kind of makes sense, because if you have early stage exploration story, you can't monetize the fact that gold is at whatever. Because if you drilled 4 holes and you know there's gold down there, not anywhere near being able to actually take it out of the ground, you can't monetize the fact where gold is today. What it does affect, obviously, is typically the sentiment, including, both including obviously investor sentiment, the theoretical value of it, and the fact that major miners are making more money, who could be purchasers of said products. But you also see that major miner sentiment changes in terms of M&A. Back here, I guess there was a lot of M&A, and down here there was, M&A. I guess, I mean, more like selling projects, but other ones acquired them as well. But the major miners got so gun shy, I think, from this period, or I should say this period, that they've been like deer in the headlights. They don't dare to take any risks. They're so afraid of redoing what happened here, making acquisitions, being not frugal with costs. Now it's like for the last several years, all they talk about is their cost discipline, trying to keep costs down. I mean, I think the major miners still have their resource or their reserves at like $1,400 gold, or maybe $1,500, like the Barricks and Newmonts. That's what they're basing their company economics on, in a sense. They're looking at their assets that they are viable at $1,500 gold. And I guess also that goes for any potential acquisition, because again, they're so stuck in, they're so afraid to overpay for anything, or that the gold price can go down. So they're so afraid. Who has not really been that afraid? Well, Agnico Eagle, Detour acquisition, Kirkland Lake acquisition, Canadian Malartic acquisition. They're putting in money in quite a few juniors recently, more into Rupert Resources, which is the largest gold deposit in Finland. They put money even in collective mining in Colombia, and this again is Agnico Eagle, who's famous for being the highest premium gold major, only putting typically only have had mines in North America, Scandinavia. Canada, I don't think they even have in the US, but Canada, maybe US, Mexico, Sweden, Finland, and Australia. The only ones they thought were like tier 1 jurisdictions. And they just put 100 million into a Colombian gold play. What does that say about the lack of projects out there? What does that say about their appetite for risk? If it's, let's say, they think it could be a tier 1 project, and I assume they think that said projects would have very low cost. So I mean, in their minds, they're probably not thinking that you're taking huge risks. I don't know what the ASIC is for Rupert, but let's say $800-900 or something. I mean, that's if they would put that in production, I mean, gold price could fall a lot. But you still seem to have majors and maybe even mid tiers. They're still so afraid, and I think like maybe you and I barely got used to gold being at $2,300. It's gone up so quickly that you can't even grasp it really. I mean, the impact of gold going up $100 in one day, or it's like, how much is this move? Well, let's take from here. What the hell am I? Anyway. So that's what, 3,001. So almost $200 in the last, I guess, 1 week or 2 weeks. That is an insane move. I don't think we have not fully grasped the magnitude of this move. It's hard to take in. $100. I mean, we're looking at percentage basis. But it's like, 3%, that's nice. But it's literally $100 today. in the last 24 hours. It's just obscene. I mean, soon we're closer to $4,000 gold than $3,000 gold. And I don't think the costs have gone up that much. So it's like even Newmont stuff might have ASIC of like 1,700, so they have 50% margin. Agnico, I think, is like 1,400 or something. Some new, fresh projects, if they get built, they might have like 1,000, 1,200 ASIC. Yeah, some, on paper have even lower than that. But I think like always, almost any project looks better on paper than what it's actually gonna be. But let's say around 1,000, 1,100, 1,200. That's such a huge margin for error. Gold price would need to get cut in half, and you probably still make some money on some mines. Especially, if you have sub 1,000 ASICs. No, so it's absolutely crazy. I mean, the margin for error is like, and especially, not only that, but you look at some projects out there, and I talked about this on K Report recently. I mean, tier 3 mines have larger margins today than tier 1 mines had a year ago, or 2 years ago at least. That's how crazy it is. So, going back to this, okay, who does it mostly, or if we go on impact level, who gets the most impacted if gold goes up $100 in 24 hours? Well, obviously somebody producing gold, because immediately all the ounces they sell today, they get $100 per ounce more than they got yesterday. Now gold might go down the same. If it went up $100, it could theoretically go down $100 tomorrow, and you only had one day of $100 per ounce in extra revenue, and pure margin, given that the costs are much lower. So sure, that's one thing. It's like 1 day's worth of upside in gold doesn't necessarily mean that all the ounces of every deposit is going to be having $100 extra revenue for the rest of their lives. We also don't know, with that said, where gold is going to go. Gold might continue to go higher. So let's say in 6 months, or if we go back to like this period, in 4 months, gold is going to be at $6,000. So my point is, some of these, the payback periods on some projects is absolutely absurd today. If you had a fully permitted tier 3 deposit today, that might, not the lowest cost operation around, let's say, but capex might not be that huge. They might have, sub 1.5 year paybacks at today's gold prices. So if you put that in production, if gold just stays here, you might make the money back that it costs to build the actual gold mine in less than 1.5 years. Everything outside that is you making net money on your investment. Let's say you have a 15-year mine life. In 1.5 years, you get your money back, and every 1.5 years, you basically double the investment, or get the investment return back. So if it costs you $300 million to put a mine into production, within a 1.5 years, you're going to have made $300 million, so you pay yourself back. All of a sudden, you're free rolling. Now all the capital risk, in a sense, is gone, because you already recouped what it costs to build the goddamn thing. And then for every 1.5 years going forward at the same margins, you're gonna be making your deposit back, right? So if you're down in the whole 3 million, 1.5 years, get 300 million, you pay yourself back. Now you have no capital risk in a sense. 1.5 years later, you make 300 million net. So you double your investment, and the next 1.5 years you double your investment again, and the next 1.5 years you double your investment again. And think about the compounding returns. It's absolutely ridiculous. Imagine whatever, it's like trying to make it as obvious as possible. Imagine I borrowed $10,000, threw it in a black hole. 1.5 years later, I get $10,000. Okay, that's nice, but it's like, okay, plus minus zero. 1.5 years later, I get 10,000 again. Okay, now I double my investment in 3 years. 100% in 3 years, which is a very high compounding rate. Next 1.5 years, I double my investment again. And then 1.5 years later, I double my investment again. And 1.5 years later, I double my investment again. And who knows, maybe it's a load gold system or whatever. Maybe you have another project, yada yada. So it's not just going to run for 15 years. It might run for 25, or you might use that money to internally fund another project or something. And so in like 7 years, you invested that money again from the cash flowing mine, and all of a sudden you're not getting 300 million or $10,000 per every 1.5 years. You might be getting 20,000. I mean, it's like the compounding is like absolutely obscene. So I don't know what the mid tiers and majors are really waiting for. Obviously, you have, if you have your hands full, for example, that's one thing. But yeah, so it's like going back to this. Again, if there are record high gold margins right now, the ones that are 100% getting that benefit, regardless what the sentiment is, are the gold producers, obviously, because they are producing right now. So they're getting record high margins. They're getting more for the ounce they take up today and sell. They made more money on that ounce than if they, at any other time they would have taken that gold out of the ground. So peak margins, peak value per ounces being produced. If you're in very early stage exploration story, you can't really benefit from that, right? Not directly. You would benefit from appetite for access to capital to prove you have a mine. Easier to have access to capital. A potential acquirer might have an easier time buying it, for example, if you prove up enough, whatever. Because let's face it, if gold was at $1,100, even if you find a tier 2 deposit or something, maybe nobody would give a shit, and certainly not maybe pay up that much, because to them it might be too risky. But today it's like, again, you're kind of free rolling down to, I don't know what the ASIC would be, and they're not expensive at all. So in my opinion, that's why I kept talking about this. But like, I own quite a few early stage exploration stories, even some pre-discovery stories. With that said, because I think they're absolutely dirt cheap. There's some of them are absolutely dirt cheap because they suffer from the sentiment, yada yada. So they can still be cheap, even they're not directly benefiting necessarily from what the record gold price is today, or the gold price is at any point in time. Still, they can absolutely be cheap. But I'm talking relatively speaking. I've said this for at least the last year. Birds in the hand are so cheap that if I would have ranked them, it's like I'm actually, I even own some producers like Integra, for example, which I never used to do. But Integra is directly benefiting from the record high gold price, and they have development projects. And that's the thing. It's like, if you can buy cheap, very advanced projects, that makes sense to build. That would make sense to build if gold was, let's say, 2,000. If gold corrects 33% like it did in the global financial crisis, if that project still makes a lot of sense to build, you have a whopper of a margin of safety. And if they're very advanced, that means they're closer to monetizing that gold in the ground than if an early stage explorer, which has 15 years, if they even find something before they monetize that. So in the ideal situation, I guess, would be to own if you can't find any producers that are cheap enough. Whereas Integra, I think the market slept on for God knows why, and you get literally two very advanced projects. So that's like almost in a sense a dream case today, in my opinion. especially when gold is going up, because that not low cost Florida Canyon mine is still making huge amounts of money. It's like 3-4 times the margins than they were expecting when they purchased it. So it's just absolutely bonkers. And again, if you have a project that could literally be, I mean, the most extreme example would be if you had a gold mine or a past producing gold mine, let's say, you're getting the full junior sentiment discount and it's not in production, but you could turn that on tomorrow. So let's say you had a turnkey operation that was trading at $100 per ounce, and you could get that into producing tomorrow. And even if you had all-in sustaining costs of $2,000, those ounces in the ground would have $1,400 margin starting tomorrow at these gold prices. That would obviously be the developer to production and the reality of the gold price arbitrage for the ages. So we don't know what the gold price is going to be tomorrow, but obviously if there's a better chance that you would be selling gold at around this level we are seeing today, if you could turn that money on for production tomorrow, right? And then the longer out, the more uncertain it becomes, but there's always a shot where it's like, okay, gold is going to go up for the next 5 years, so it doesn't really matter if it's within 5 years, you're going to just have increasingly good margins. That's not an impossibility either, I guess. And some people think that commodities will have a great decade, and again, that's like 5 years. And then some think commodities are gonna revalue for the next 10 years or something. My point is, if an ounce produced is worth this much in terms of margins, let's say it's like $1,000 all-in sustaining cost, and they are currently being sold for, take $200 down here. So this is an ounce getting taken out of the ground, what they would literally have in margin value today. This is what you can buy them for. Obviously, the biggest kind of value steal or arbitrage opportunity would be to find a junior that could be in production as quickly as possible and have this gap here closed. Because let's face it, if I could buy something personally for $200 and put that into production tomorrow, and what I bought for $200 would give me $1,400 in pre-cash flow, pre-tax earnings, Jesus Christ, I would want as much of that as I possibly could, right? Obviously, there's not a lot of cases out there where you can actually do that without no investment. But my point is that I simply prefer right now to find the cheapest ounces out there that are closest to actually becoming mines, and thus closing this in the ground value, or not value, in the ground price to its out of the ground value. That's why I also made the point, I think I made a point on K Report, I don't think it's up yet, where I say there's a mountain of difference between a project on paper than a legit project that's actually should, and will become a mine. You can have a paper project where you have a PA stating it's worth $3 billion today. If that's quite a shitty project, or it's in some place where you can't build it, or there's whatever, there's just no way it's good enough for anybody to really put into production. They would have put, let's say, 30 other projects in, bought 30 other projects and put them into production before they would put that thing into production. Then it doesn't really matter, right, what the gold price is at any point in time, because that's almost for all intents and purposes a permanent trading sardine. That does not mean it can't go up 5 to 10x from sentiment, but it's actually never gonna monetize that value. So it doesn't matter. There's no arbitrage to play. You're just playing the sentiment swings. And then you have actually legit projects that can get permitted, and hopefully, the sooner the better, and they're very robust and they're dirt cheap. Where it's like, you literally, it's a project that's most likely gonna get into production and should get into production, and it's selling for a price this low. Hey, one of my favorite. Well, first of all, Integra, again, dirt cheap, because like it's maybe pricing in what the value right now is of Florida Canyon, if even that, and you're getting 2 development projects for free, quite advanced one, including Delamar, which probably is more likely to get permitted and not in the too distant future, thanks to Trump coming in. Right, so Trump and the tariff stuff has sparked a gold rally, and it's probably going to shorten the timeline to production for a project like Delamar. That's like a perfect crime in a sense. That's why I like Integra so much, and I've said why I liked Integra so much. But then you have, one of my other favorites, First Nordic Metals, which I think selling for maybe, what is it? Let's say $70 an ounce or something. If you only take Barsele, so that's 2.4 million ounces, it's actually closer to It's actually closer to 3 million ounces when you do the calculation at $1,700 gold. So let's use that. That's 1.5 million ounces, and the market cap in USD is what? I don't know, 85. Okay, let's say 90 to be sure. 1.5. $60 per ounce. Barsele today, if that was in production today, I think Barsele would have at least $2,250 in ASIC margin, which is 37.5 times what it's selling for in the ground. Obviously, you would have to spend money to get that into production and all that. But I'm just trying to show how absurd it is. More ounces in the ground that are very likely to get permitted, and a deposit that's very likely to get built, and would survive at much lower gold prices, but today would have like a 2,250 margin, and they're selling. You can buy it for $60. That is absolutely crazy. This is what you kind of would expect, and I think it did trade for that when gold was at around, I don't know, $1,700 or something. So absolutely makes no sense. But that's the difference. A lot of how this sector works is that it treats a lot of ounces, not all ounces, but a lot of ounces kind of the same. Whereas like they might be absolutely worlds apart. Do I think that there's going to be a lot of acquisitions on optionality plays anytime soon? Not necessarily, because I think the majors are that afraid of making mistakes. They don't want, typically, I don't think, build mines that really only work if gold stays at this price. But we're seeing, and I think we're going to continue to see, acquisitions of projects that works at much lower gold prices and are dirt cheap today. So that is my point, that there's a mountain of difference between something that can get monetized, get into production, should get into production, will get funded, yada yada yada, should get funded, where you can actually take advantage of these absolutely nosebleed type margins. If we're anywhere close, I mean, if you can get a project up in 3 years, it's like, okay, how much can gold go down in 3 years. Yeah, I mean, we've seen that it could flash crash over a year, 33%. Most projects would still make a shit ton of money at $1,000 lower gold price. Gold could also keep going higher. Gold could go sideways, whatever. So within every span, except that if gold goes down like here or something, maybe even lower. I mean, depending, because I do think some mines, new mines, fresh mines, will have could really have ASICs around $1,200 or something. Even if their PA says 900, 800, I don't think it's gonna be that cheap. Typically, it's never. But even 1,200, so you're still making money all the way down to whatever. It's like the Barsle resource was done at $1,300 gold price, for example. So it only accounted for ounces that were believed to be economic at $1,300 per ounce, and they actually had cost estimates that were higher than both Ikari uses and what we can see in Björkdal. So even, I mean, they used conservative cost estimates and came up with 2.4 million ounces that should be making money all the way down to $1,300 gold. So that's the kind of margin of safety we're talking. It's absolutely obscene. Yeah, so I hope you get my point. When does the gold price actually matter? It matters when, well, it for sure matters when you're in production. Everything in between is kind of, I mean, obviously, if you are not in production, but you're going to be in production tomorrow, then you can kind of assume that you're going to be starting production with the same gold price as today, right? A year from now, a bit more uncertain. 2 years from now, a bit more uncertain, etc., etc., etc. So the closer you are to the monetization event, the more relevant today's gold price is, right? With the peak relevance being if you're in production. But it's also, again, what are the odds of this getting permitted? What are the odds of somebody actually wanting to build this? Because at the end of the day, that's the only way to really force value to be recognized. If sentiment doesn't, do much in a sense. But most juniors, absolute vast majority of juniors, doesn't have anything worth putting into production anytime soon, or will never find anything being worth putting into production anytime soon. So for all those cases, if we're really honest and rational, the current gold price doesn't really matter, because they're never gonna be selling that gold they have in the ground. So gold could be $1,000 or $3,000. It doesn't matter. That's never gonna get monetized. So the theoretical margins at today's gold price is just that, absolutely theoretical. They might have a shoe factory instead, because that's, I mean, if they had a shoe factory, that would basically be producing as much gold as if they had that gold deposit. That's never going to become a mine. So it's only paper value. And as we're seeing, even Integra with its Florida Canyon mine, which for sure is not a tier 2 or tier 1 mine, that is still, regardless of what the sentiment is, regardless if it's not a tier 1 or tier 2 mine, that has around $1,400 of margins, which is much higher than the average company had for their mines back in 2011. So you can say what you want about an asset like that. Doesn't change the fact that it's, I mean, printing cash right now. The market kind of, somewhat neglected that for quite some time. I mean, again, it's like, how rational is this sector? Not much has changed here. Minus 38. Yeah, gold has gone up though. But it's not like the intrinsic value of, the long-term intrinsic value of everything Integra has did not go down 38% and then all of a sudden become 135% more valuable. But yes, Florida Canyon's margins have rocketed like the share price has. But it's not like they were making, Integra was not making more money here than it did here. it was making more money here than here because gold price was much lower. So it's like there's a lot, and of course you see all this trading and there's a lot of liquidity, but all of a sudden, from out of nowhere, people start to care. Right? And then all of a sudden they see a breakout and they see a trend forming, and all of a sudden it's kind of that's what I keep saying. It's like even in a bull market, you should only expect net gains like 20% of the time. And I talked about this in the last video or the video before that. So it's like even if we are in a full-blown bull market, to keep yourself sane, do not expect that the juniors will be going up every day. That's not how it's gonna work. I mean, take this. One of the best rallies we've ever seen in the gold junior space, especially when you account for the time. 452 goddamn percent. Okay, okay, bottomed up, down again, grinded here, gapped up 3 days more, and this is, yeah, okay, daily. So it's like, okay, red day, even steep, now okay, up a bit, then down the next day, and look at these candles. So they were quite red for a while, gapped up, consolidated, gapped up, almost retraced the whole move, up again, consolidated. I mean, there's a lot of red candles here. It's like, okay, net gain, consolidated, net gain, went down, up again, didn't go anywhere, up a bit, down, opened up much lower, ended up okay, opened up much higher, ended up down, consolidated, and don't kid yourself. Like throughout this entire move, it's like there's plenty of reasons to. I mean, plenty of days were red, plenty of days the juniors didn't go anywhere, but you have these kind of whoop net gain, but almost retrace. So it's like 1 day of net gain. This that gave it all back, and then a bit more, but then it kind of, I mean, I hope you get my point. It's like it starts and stops and corrections and trend lines and traders and all of that crap. So it's like it's kind of almost like a bear market, of course, in reverse. And all of a sudden you have these net gains. And if you miss this, boom, it's like you only needed to miss, really. I mean, if we're talking just holding, it's like if you just missed a few of these days, that's like a lot of the, theoretical gains I was going to say. It's like in just a few days worth. But you had to hold through all this shit. And yes, in theory, which everybody's trying to do is that, oh, well, I'm going to buy it here, sell it here maybe, buy it here, sell it there, buy it here, sell it there, buy. The end result is that they're going to be trading away all the possible gains, and then at the end of the day, the person that will have made the most is, even if you're at average down here, he's going to be making more than anybody trying to trade this shit. And especially if you find a high conviction story where you're not just trading a half a percentage, you might be in with 5%, you're going to make a lot more money in percentage terms and especially in monetary terms than anybody else who's trying to get every single up and down correct. And it's like on the point of everybody shitting their pants because their pre-discovery or early stage explorer is not shooting through the roof here, again, because, well, they're not in production, so there's nothing forcing the market to reflect the fact that gold is up here. And in some cases it actually makes sense because they might not have anything worth mining yet. So it's like, and if they do end up finding it, it's not going to be in production in 6-7 years. So again, from a rational perspective, it makes no sense that trading sardines go up 5% and drop 80%. They might never, they should probably never have gone up in the first place. But that does not change the fact that this sector is famous for having everything go up 500% and then crashing 80%. That doesn't make it, just because that's how humans behave, doesn't make it rational. And I have a private company, for example. Well, I don't have it, but I'm invested in it. uh, and this private company is like, I'm up quite a bit in it. It's a, quite a large position for me. I haven't sold any shares, so it's like, as that has been marked up by whatever, some trades or transactions, whatever. So okay, I'm up on it percentage wise, obviously, and with that, the position has gotten a lot bigger. Um, but it's a private company, so it's like you can't trade it. But they have, they are producing metals. So it's like sentiment, whatever, it's like almost a non-factor in a sense. Because I can't, flip it, whatever, or buy it lower, or yada, yada, yada. It's like, it's actually the value of the business that is important, and that's directly affected by, what the metal prices are doing. And if you owned a gold company today, you would be happy. Why? Because gold is up $100 in the last 24 hours. Would you be less happy about your private gold mine if it made if it made 3% more than yesterday? You're earning $100 extra per ounce you're selling today relative to yesterday. Would you get less excited about that because the sentiment in the junior sector is shit? Because there are early stage explorations plays that are not pricing in much. No, you wouldn't care about that. You only, the only important thing if you own actually the gold mine is what is the gold mine making for you. That's the only thing that's important. You don't give a shit about the sentiment. If ounces in the ground out there is trading for $1 or $500, that has no effect on the margins of your gold mine or what it's producing in terms of cash flow to you right now. You wouldn't get depressed because people hate gold mining stocks today when your gold mine just became a bit more valuable. And also, I mean, one thing is like this sector, I talked about this before, it has this negative spiral kind of thing where you have exciting, let's say, exploration story. Sentiment is hot, let's say 2020, have an easy time making money, or making money, good access to capital, so it goes up because they can take in a lot of money, thus produce a lot of news, do bigger drill campaigns, maybe increasingly bigger drill campaigns. Everybody gets excited because of the news. The sentiment is high in the sector. People are, in buying mode because they've seen the uptrend go. They've seen a recent uptrend, etc., and it just again feeds on itself. More money, more people buying it, easier to raise money, creating even more news releases, creating even more excitement, etc. All of a sudden, let's say the exploration story takes a turn for the worse. Blue sky is not, let's say, materializing. What happens then? Well, disappointment. And then let's say we have a gold price that goes down, or at least sentiment that goes down. So whatever success they have is going to get priced at lower and lower levels. So it's going down instead. More people feel like selling. So it gets the weak hands or weak hands to sell. Traders pile on, exacerbating the trend down, keeping the trend intact, for example. Which makes, if they're gonna raise money, it means more dilution, which makes people sour more on the stock, which means they probably raise less money, which means there's even less news flow, and the news flow that comes out, any hits, get less and less value for it. That's a negative spiral. So you have the sentiment feeding into a bunch of stuff, creating even more negative sentiment, and actually, let's say, increased dilution. That regardless, I mean, that's what people are always afraid of. I was gonna say dilution. It's like they always see that as a negative almost regardless, despite the fact that the whole point is that if you raise $10 million, the idea is that you have a legit project, whatever, and that $10 million can prove up $50 million worth of value. So I mean, you're 5xing the investment, and hopefully you can keep doing that, right? that's the whole idea. I mean, dilution itself, you can't create $50 million worth of value if you don't spend $10 million in the ground. So that's one funny thing where it's like, but that's one big thing that people are fearful of, and there's a lot of cases where you have some whatever brokers or yada yada, so they kind of sit on the share price or short it even because they believe they can get into the next financing, for example, which kind of it becomes a self-fulfilling prophecy, let's say. um, and that a lot of the time, even if okay, you have a dilution and that's the day of the bottom, when people, oh, now the negative news release is out, and that oftentimes is actually the bottom. So everything has been I'm not going to even say priced in, because that's like assuming it's rationally priced, but you know what I mean. So it's kind of they go down until a financing sometimes, and that actually marks the bottom when it actually happens. um, but it's also, I mean, when we think of the upside, so Lumina Gold just got acquired by CMOG for 581 million, and that's up to 581 million coming into the hands of junior speculators. I didn't check, but I assume it's a all cash deal, because it's a Chinese company. I don't know even know if they're listed. They might be, but it's like, or Canadian investors going to be taking Chinese listed stock. Maybe they're actually listed on some other exchange. I'm just assuming here, okay? That's for discussion's sake. Assume it's cash in the hand. So that's a whopping 581 million of dry powder that they're going to be getting. They're getting 581 million of cash. They're invested in Lumina Gold, which is a junior developer in Ecuador, I think, or is it Colombia? No, I think it's Ecuador. Very large project, like 11 million ounces. Not the highest grade or anything like that, but it's a very large project. What's the MPV of that is today? I think it might be closer to 4 billion or something, if I remember correctly. So one could say that, okay, here you have one of those examples where, oh, it's the MPV today is like 4 billion and you only get 581 million. So one could say it's a take under. And I can see that, of course, but at the same time, it's like, okay, well, some I think are just happy to get the premium. I don't know exactly what the premium is. Well, I think it's up like 30, 40, 50% or whatever. But let's think about this from a context perspective. It's pretty large capex. I think it's above $1 billion that you would spend in Ecuador. And it's not a tier one asset, I wouldn't say, even though the production profile is huge and all that. But yeah, so it's like, how many today are, especially in these turbulent times, are that happy to spend, I don't know, more than this to acquire the company and then put in $1.4 billion or something in the ground. And I don't know exactly what the payback period is, but let's say you have 3 years of construction, and then you start making a boatload of cash if these gold margins hold up. There's still a bit of risk in that, especially I guess in Ecuador, even though obviously Lundin Gold is making a killing in Ecuador right now with their Fruta del Norte deposit. It's just mind blowing. One mine, it's a tier one mine for sure, $12 billion. That is absolutely crazy in Ecuador. I mean, one would think there's like, okay, it's a one mine in Ecuador, $12 billion. Yeah, but it is what it is. It's like, do I think Lundin Gold is cheap? No, I don't. I don't own it. Obviously, I should have owned it. You know what I mean? Because that chart is just basically the prettiest chart I've ever seen in the gold space for quite some time. It looks like I would expect gold juniors to do what Lundin Gold basically has done. Okay, but back to the point. 581 million in the hands of people who are, a lot of them probably are gonna use that maybe to invest in other juniors. Not everyone, maybe, And of course, some is going to Ross Beatty, and he's not typically in the market bidding up companies, maybe. So not all of that is gonna, once they get paid, not everything of that is gonna show up in every single junior or all that. But still, that's up to 581 million of dry powder, because like if you're sitting in a stock, if you're all in, you have, let's say, 10% in a stock like this, and you're happy with us, like you're just waiting to, for the juniors to revalue, or your juniors to revalue. All of a sudden, this gets bought out, let's say 50% premium. All of a sudden, you have 15% of your portfolio that you can't have in this stock anymore. So you free up 15%. What am I saying? Did I say 10%? Whatever. You get my point. 15%, let's say, if you started with a 10% position. That needs to find another home if you want to be, again, fully invested, for example, in the junior space. And you can't have it tied up in this because this is getting acquired. So they're giving you 15% of your portfolio in cash that you can then spend on other stuff. And there's up to 581 million of that kind of cash coming into the hands of, junior speculators, junior investors. Some of that might make it out to the market. That's gonna beat up other developers potentially. I mean, maybe similar stories to this, if that's what, if you're obviously into developers, if you're into Lumina Gold, and that might bid them up, and most of them are still dirt cheap. I mean, many say this is a take under, for example. So what happens if they go up, and now, the mid-tiers, sooner or later, mid-tiers and majors, they're like, okay, we need to actually buy some of these assets, like the payback periods are so quick, yada, yada, yada. Well, they're going to have to paying a bit more because people like Lumina Gold shareholders have bid up some other stories. So they have to pay even more now. That means even more money going from majors into the hands of the junior speculators. And if whatever other story sells that they help bid up, that's, again, more cash in the hands of junior investors that they can bid up other juniors for. And there's not too many actually, good to great companies out there. And some, even if you're, they spend that on some high risk ones. Some, if they saw $100,000 worth of buying, they would be up a huge amount. So that's a positive spiral on the way up. And who knows, maybe at the end of it, we will see like 2011, where Kinross bought Redback Mining for 7.2 billion US, which is like 9 billion CAD, or was around 9 billion CAD, for a 450,000 ounce producer, when the margins, I don't know exactly what the margins were, but maybe peaked around, I don't know, let's say $800 per ounce or something. I don't know, I'm just guessing here. Well, pretty much every mine is making higher margins today than Redback made back then. That's something to think about. So it's like, if I don't know what valuations for mine purchases would be today to consider them like to have the same premiums as back then. Here it turned out to be a bad idea, but that's also why I think people are paranoid about it. But that's the thing. It's like Redback was probably not that cheap when Kinross bought it, but they felt like, hey, okay, two big mines, long-lived mines, gold price is going higher, we're a gold producer, we need more mines, we need to grow or stand still or whatever they wanted to do, so they paid up that much. But obviously, if Redback Mining would be trading at $2 billion at the time, they wouldn't pay 7.2 billion USD. But they had to probably give some kind of premium to get the shareholders to sell. And it had been going up because, sentiment was improving, gold price was going up, yada, yada, yada. So again, this sector works in like positive spirals as well. That, if you need to buy a new mine, new project, you can't, majors and mid-tiers can't go back in time either and wish they would have bought it when sentiment was a lot worse and the assets they need were selling at even lower prices. So that's what I kind of, also am looking forward to. Yeah, so okay. And just again, it's like touching on rationality, irrationality, whatever. This is First Nordic and the gold price. So gold price really taken off in the last 1-2 weeks, while it looks like First Nordic is kind of in a, I don't know, making some trading pattern or whatever. And you can even see it today. There's one guy who's obviously, I assume, some kind of trader who basically flip-flops all the time, and he called the chart terrible today, for example. What I'm looking at, of course, is the fact that gold is currently up here, and Barsley is one of the best projects out there that's not 100% owned by a major, and the share price is has not followed this at all. And again, it's not like it makes sense that First Nordic should absolutely be 100% tracking the gold price, because Barsley is not in production yet. But if there's one project that I'm pretty sure is gonna get into production, should get into production, and is gonna get fully permanent, that would be Barsley. And we're not talking 15 years either. And this happens to be a high quality project that makes sense at a lot lower gold prices. Gold could drop by $1,000, and that would be no problem for Barcelona. $1,500 would be no problem for Barcelona. It would be worth many times at that price than what it's trading at today, where our 45% free carried interest is trading at today. So huge margin of safety, one of the most advanced risk projects there is out there. Certainly something I would think a lot of mid-tiers would like to own. So even though it shouldn't necessarily track this 100%, of course, it should still factor in something, the fact that this is, if this was 100% owned by First Nordic, that would be for sure one takeout target, in my opinion. And and again, this just means more margin of safety, basically. Gold needs to correct even more, much more from up here, or quite a bit more from up here than down here, for Barsley to become uneconomic, for example. But I think, again, just looking at this, that's why I'm sometimes frustrated with traders, because in my opinion, I think they're flipping pennies, I was gonna say. It's like, take here, there was nothing magical about this level here, for example, and yet price bounce. Obviously, some kind, I don't know, maybe somebody was distributing, because it's like there hadn't been much liquidity in Barsley Minerals, but First Nordic saw a lot of liquidity. Liquidity has been very high. There's a lot of buying and selling in First Nordic, or in this time period, basically. So nothing magical at all. When it hit this level here, gold was here. When it hit it again, gold was up here. So for all intents and purposes, gold was going higher. The implied value of Barsley was going higher. Gold needed to fall even more for Barsley to be uneconomic, and it would make a lot of money if gold stayed at this level rather than this level, for example. Then gold sold off a bit. Then, for some reason, First Nordic joined it, right? And then back to this level. And then again, it's like, okay, one day it just broke through and brrr. Okay, maybe, I hate to say like too much too quick, because like I think this is absolutely a ridiculously low price for First Nordic. But okay, you have profit takers. A lot of money was spent on promotion, etc. So you have no idea. Maybe a bunch of traders got in, and this is a high liquidity stock, so I guess it's much easier to trade than a very low liquidity stock. But then again, I think this goes to show that there's nothing magical about this. I think there's pretty much traders that don't care at all what the actual price to values. They don't think they don't. I mean, I think this is one of the cheapest gold units in the entire sector. But obviously, you're not selling here if you think that's the case. If that's what you're looking at. But if you're looking at, okay, we could make a trend line here now. We're going to keep it down here, whatever. All of a sudden, voila, you have, irrational, let's say, selling or profit taking, whatever you want to call it. And who knows, maybe this is actually a bull flag. It's gonna, I obviously think First North is gonna go a lot higher. So, yeah, who knows? I'm not a TA expert, but it could be a bull flag. And we see this stuff in a bunch of, top of the line great juniors. Like, okay, Magna Mining, one of the highest quality juniors around, goes up. And you could, I don't know. You could draw, I guess, lines wherever. It's like, does this has anything to do with the fundamentals or price to value? No. It just happens there's a lot of traders in this sector, and high frequency traders, support traders, resistance traders. They don't give a shit. Just look at this. The way Magna, maybe it's more obvious in like a logarithmic chart, maybe. Yeah, it looks to be the case. Let's do it like that. What's special about this line? Nothing at all. It was disgusting. It got disgustingly cheap, and I remember I said it at the time. I wasn't expecting. Well, to be fair, nickel also crashed during this period. Unlike gold now, for example, First Nordic. But nickel prices absolutely crashed. Sentiment got in the absolute shitter, and nickel prices haven't really gotten up yet. That's still way too cheap for what they had. And I said it at the time, at the end of the day, you might make more in Magna. Or let's do it like this. You might make more in Magna by this happening, it getting irrationally cheap because some traders saw a trend line and was able to, you saw it also in the forums back here. There were bashers in on a daily basis. Some accusing me of this being a, pump and dump and all that. It is a, sandcastle kind of story, whatever. And I made the comments like, I think I wouldn't be surprised that one could make more money in Magna because you had this totally ridiculous trading sell-off, or whatever you would like to call it. And lo and behold, not too long after 2024, 2025, so less than a year later, you would have made from around the lows 300%. Absolutely crazy. Magna's treated me very well, and actually I think I made more in Magna thanks to this correction here than if it would have just gone like that. Because I was able to increase my share count at much lower levels. Of course, at the same time, you had to, your current position suffered, paper losses. But although with that said, it's like I was in early, for example, so it's like at this point I made a lot of money. Then it went down, so it's like gave a lot of the paper profits back, but it's like did some reshuffling up here, and then some reshuffling back, because the position got maybe too bloated up here, and then of course nickel prices went down a lot, so it did change the value in a sense, but it just became absolutely ridiculously cheap down here. And bounce here, undercut, bounce here. Again, nothing special at all with 40 cents. Nothing at all. There's nothing magical about this level at all, except traders look at it. So when it didn't break down, okay, now we're gonna bid it up. Now here we go. Broke out of it. People piled in, traders turned around, tried to get them to break here, didn't. Well, it kind of briefly broke it. Up here, people got despondent again, and it's like this again when people, I think, were, I mean, not a lot of people wrote in the forum back here. Not too long after that, markets start to make sense again, up 134% in not too distant future, start to correct again for no other reason, and of course all of a sudden the market is making trend lines again, and these consolidations, so it popped up, consolidated, people taking profits, then it ripped again, people taking profits, people getting despondent, ripped again, consolidating, boom, boom, boom. My point is that Magna's fundamentals has basically been going like this ever since inception. Well, it really kicked off with the Green Hill project acquisition. And they have a plan of growing it, they want to grow 5 to 10 years from now. My point is that it's a lot of the absolutely best opportunities, best risk-reward layups for value investors or long-term investors comes thanks to traders. Because they don't give a shit how cheap they're selling anything. If you're a strict, trendline trader, resistance trader, you don't give a shit that down here or here it was already one of the cheapest juniors around, whatever, and I bet they try to get this gap to close, whatever. That's the thing. It's like there's most people are traders. That's the thing. Most people are absolutely traders. The people who actually make the most amount of money in Magna up to this point, I would think, are the ones that have had it as a high conviction play. Realized it just when it was cheap, when it was not as cheap. So probably bought even more down here and made a shit ton of money. Like I think a lot of people are probably up more here than they were up here, because you had a lot of chance to buy it even cheaper, even more de-risked, etc., etc. So the question is then, it's like, are traders good or bad? Well, that depends what you do, right? For me personally, I think traders are one of the bread and butter to kind of take advantage of. I was able to buy a lot of First Nordic sub whatever this level is. Because I don't think this should be possible. This should not have you shouldn't have been able to buy pretty much as much shares as you wanted, sub whatever that is, sub let's say what is that, 30 cents maybe, yeah. Then it revalued a bit, not even close to fair value in my opinion, and now we have a similar type situation where it's like, okay, start a trend line for God knows what reason. God knows what reason. People are seeing this and think, okay, all of a sudden traders are like, okay, here's an opportunity. It's like we're seeing a trend here, whatever. And yeah, I simply expect, I actually, I didn't buy a bunch, but I bought some at 44 cents today. Because this is the only thing I'm really looking at. What is the value of it? What price am I paying? If gold is at 3,438, and this is one of the most advanced and best gold projects out there, there is no no rational reasons why this asset is worth less than or worth the same amount as when gold was, I don't know what it was back here, 2,800 maybe. So again, it's like, is it bad? Is it good or bad that there's a lot of traders out here? I think again, they make some of the absolute disgustingly best layups, because they look at these whatever trend lines and okay, whatever, peeled over, okay, we're probably gonna hit that trend line, so I'm gonna sell it here and have it go down here. It's like if you're a price to value investor, I don't know how many extra shots you get at actually buying stuff just absurdly cheap. This was like when is this? This was like a 5-month layup. Absolutely ridiculous. Another, layup. And every single dip in any story that's intact and could go a lot higher. Every single dip is just a degree of a buy. I mean, I think all of these buys, well, they were actually in profit here. I think all of these buys one day are gonna be way in the profit. I think all of these buys are gonna be way in the profit. It's just that every other dip is gonna be even more in the profit. Again, assuming the case plays out, assuming it's an intact story, there's no reason why, in that case, not every dip will simply be people making worse sells and people making even better buys. So that's Jesus. I've gone on a long time. I wasn't planning on doing it so much, but I guess the point is, think about what is actual value, what is tangible value. Can you force the market to care in a sense? Or like a trading sardine again? It's like in a trading sardine, in a shitty project, for example, no hopes of actually becoming something, or it's like very, very low probability of ever getting monetized, either acquired or being put into production. Then it's almost irrelevant what the gold and silver price does. It's just a matter of, yes, they can go up an enormous amount if sentiment swings from very bad to very good. But there's nothing really that, from a rational perspective, that should have then go up and price in like they're probably gonna have a mine if they're not. So it's just sooner or later they're gonna go down again. You know what I mean? So a trading sardine, really, the rational thing for a trading sardine is to never go up. But they tend to do that in any time the sector becomes hot, everything goes up, and then everything almost goes down. But it's not like you're, from a price to value perspective, it's not like you're you're a value investor. I mean, you're more a swing trader, and there's quite a bit of people who's like, they know some, even producers, that they are shit, they are high cost, but you also know they're gonna go up a lot if silver goes up. From a long-term perspective, I mean, you can just look at First Majestic. I mean, now they actually bought a very good silver deposit, but that doesn't have endless mine life. And if you just look back at the earnings period for First Majestic, I mean, over the last 10 years, how much money have they actually made? Not much. I mean, I think they lose money most years. So it's actually a pretty shitty business, but that does not stop First Majestic from, at times, making quite a bit of money if silver goes up, and it certainly does not stop from people falling over themselves buying it if silver goes up because they think they're gonna get rich. But from a company, fundamental perspective, most of the time, at least over the last 10 years, I mean, First Majestic has been a horrible business. Last time I checked, at least. Anyway, consider me biased. If I'm, for every company I mentioned, some are banner sponsors as well, twice biased there. And again, closing words, let's just try to be smart. Market is going to throw a bunch of stuff at us, like, some gold producers going down when gold goes up because the market is down. Obviously, in a vacuum, if you owned those gold mines, you saw them make more today, so they're worth more to you. But Mr. Market can have them sell off because, what's happening around the world or in other markets, whatever. That doesn't mean that, if price goes down. I think Newmont was down for a while. I mean, did Newmont go down in value? I don't think so. Gold went up $100. So you can understand why things happen. You can understand why there are, why some of these trading path, why it doesn't really make much sense. But when you account for the amount of whatever weak hands and trend followers and momentum players and traders and yada yada, then you can kind of understand it. Then the question is like, okay, knowing that, how do I take advantage of it? I mean, Magna, for example, it was simply that, okay, this stock should never be this cheap, but it became this cheap thanks to, let's say, traders and weak hands. Okay, well, I'm gonna buy even more, and and because my your idea is that the intrinsic value, whatever that is, one day sooner or later it's gonna close in on that intrinsic value, and you think it's much higher today than where it's trading at, and it's going to be even higher, down the line because there's going to be value created. I mean, then you're just getting absurdly good risk-reward bets that you shouldn't do. But it's like if you're buying, whatever, if you bought it down here, you certainly wasn't buying because there was the short looked nice, It just broke down, and still that was the absolute best buy going back to here. So only one that cares about what, only one that looks at what they're actually getting. I mean, they look what it cost them to buy ownership of something, and they compare it to what they think it's worth. Only one of those would be buying here. There's no traders that buy this point here, for example, and this turned out to be the absolute best. So there's no trader that's gonna buy the absolute best spot, in a sense, if you know what I mean, because it's pretty much impossible. Because when a momentum is to the upside, and let's say they're riding that, they're going to be buying high and low, and let's say in the meantime they might make some money here and there, but I don't think a lot of them actually make a lot of money, let's say. Anyway, my 2 cents, my 2 bias cents. Not investing advice. Don't buy or sell. Not buy or sell recommendations. Don't invest money you cannot afford to lose. Juniors are risky, all of that. And again, don't buy any stock because me or anyone else owns it. You got to see it for yourself. You have to know why you bought something. You have to be, you have to have conviction. Conviction cannot be transferred. If you don't have conviction, you're absolutely gonna sell low and buy high. And that's why, I mean, a lot of people complaining, for example, about the lack in reaction from, let's say, expiration stories. They get very frustrated and very scared because they're not excited about what they own. They don't have no idea what they think it is worth, if it's worth anything, and they just look at the price direction. They let the market tell them if they've been a good boy or a bad boy, and they think they're dumb if the stock goes down, for example. Whereas, like, in some high conviction cases, like I find this market to be absolutely moronic, for example. So I don't really get upset. I just in a sense, I guess end up punishing the market. My revenge is to make even more money thanks to the stupid market. Anyway, no guarantees. Thanks for listening. Bye bye.